Hey everybody, what's up? Good morning, good afternoon, good evening, depending on whenever you're watching this video. All right, so today I am going to be making a review of this trade. There's a sell trade idea on AUD NZD, right? That is the Australian dollars, New Zealand dollar, right? Yep. So it was a trade idea I called out. I mean, the trade actually played out perfectly well. It was a sniper entry and is currently running about 370 pips in profits. I mean, I'm not in, I don't trade AUD NZD, but marking it out, seeing it playing out, is something to be happy for, or something to be happy about. Right. Yeah. So this was the trade, right? I sent it to the free channel. I actually posted it on the Signal group first before I then forwarded it to the free Signal channel, right? You guys can see. This is it on October 3rd. That was this month. Yes. Today is October 20th, so about 17 days ago, right? I posted this markup, right? As you guys can see, we have a 1 hour breaker structure to the downside plus liquidity below, right? So I have already identified my structure shift plus the liquidity. So why do I think it's going to go down? Why do I think price is going to get to this area and reject from that particular area? Number one, because of what the liquidity I've been able to identify below, right? And then I said, keep an eye out for distribution inside the boxed area above, right? And then this is the markup. You guys can see the liquidity, all right? This is equal lows. This is money just chilling in this area. And then we had a 1 hour shift in structure from this higher high to this higher low. And then we had this higher high, and then price, broke the structure to the downside. And then we had some run on liquidity, price filling the imbalance, and then price, moved away from this imbalance. So he had no reason to go up again because number one, we have bearish. Internal liquidity has been captured. Price has given us distribution already. So I was anticipating price to go up and then, just drop from that area, from this area. I mean, anywhere from this mitigation candle up is where I'm looking for distribution to take place. So this was the markup. As you can see, I actually published this trade idea, on the 3rd of October, 12:26. That is 12:26 p.m. That was when I actually marked out this trade idea. So this is not me using the chart replay tool to perform some magic, right? I actually marked this out before I played out exactly. And then so that was the markup in the Signal group. Also I sent it. So yes, my AUD NZD analysis and yeah. So now this is where we had today. You guys can see that was entry, and price just left that area, and then that was it. Can you see it's been dropping since? I just want to like explain the trade idea, you know why that entry, okay, the liquidity, and everything. As you can see, the entry was 80 level, 80 level entry. Stop loss was just about 25 pips stop loss, which is below 30 pips, right? Which is okay for me, right? My maximum stop loss pip is 30. So 25, 27, 5, 10, they're okay for me as long as, it is not 31 pips. Anything like 31 pips, 32 pips, I just, wait for price to get there and then wait for distribution to take place. You understand? So this trade idea actually, um, there was no like limit order for this. Okay, there was no limit order. All I wanted to see was price to go back up and then give me, evidence that it wants to go down. That means me waiting for distribution on lower time frames. That means price gets to the point of interest, and then I begin to see some kind of break or structure to the downside. That is giving me an extra confirmation that the lower time frame is now in agreement with the higher time frame, or is now in agreement with what the higher time frame is set to do, right? So there was no limit on this trade. But then just after you played out, and then like, okay, price actually played the 80 level. And then if I had taken this trade, with a limit order, right before price got there, it would have been an amazing trade. You can see the response price gave after it hit that 80 level. The response was, massive. You can see this big drop and then followed by, rejection, created more liquidity, and then price went up. Right. So just want to discuss this trade. Right. So now first let's go to the daily time frame. Right, let's go to the daily time frame and then see what do we have on the daily time frame, or what was the daily time frame saying. Right. So quickly, um let's use the object tree. Just remove all of these. Let me just lock this in. Okay, and then I'm gonna use like just remove all of these. Then we're gonna like unhide them later, so we can just yeah. So this is the daily time frame, right? Daily time frame. We can see AUD NZD has been going to the upside, right? So I think there was a buy opportunity. I called out somewhere in this area, like I think it was wanted capturing these equal highs or so, and then it didn't give us the play on lower time frame, and then price just went straight for the liquidity that day, right? So we can see prices, price has been bullish. You can see how AUD NZD has been going to the upside. So the move was like a retracement, right? Wanted to catch the retracement, seeing how we had, price was expanding to the upside. We had the high, we had this low, we had this high, we had this low, right? Market structure. And then we had this higher high, we had this higher low, and then we had, this high, right? So price was in this area. I was like, okay, so I've seen the structure, the market is still bullish. But then I went to the lower time frame and then I saw a break of structure to the downside. So now the 1 hour is not in agreement with what the daily is doing. When I marked out the chart, the daily is bullish, the 1 hour is bearish. Okay, now the daily is bullish, but price has extended a lot, has given us, a higher high already, right? Higher high has formed, and then 1 hour broke structure to the downside. And you remember, right? Proof that the higher time frame is about to start retracement is that we see a break of structure towards the opposite direction on a smaller time frame. So if the daily is bullish, creating higher highs and higher lows, and then on a lower time frame, we see a break of structure to the downside, that could be giving us a telltale opportunity that the higher high on the daily might be set and the daily is about to start a retracement to giving us a higher low. All right, so that was what happened on the this pair created a higher high. I saw, the breaker structure to the downside on the 1 hour, and then going to the daily time frame, I started spotting out, what could the daily time frame, when if price starts to go down, where could price be attracted to? Okay, and then I saw this liquidity. Okay, I see this equal lows here. So price might be attracted to these areas because on the daily time frame, considering the daily range, this can be considered as what internal liquidity. That is the liquidity inside the trading range, right? And then after the in the liquidity, I can also see what an imbalance in price, right? So I see the liquidity, I see the imbalance. So those two conditions alone can make price to, retrace that far. Exactly. So now in terms of the daily range, I have this as my daily range as now. This is the higher, this is the down range here for me. So I have this as the down range, and I have this as my top range on the daily time frame. All right, so now I have this as down range and then top range. Do I have imbalances to be filled? Definitely. There is one here. There's an imbalance to be filled here, right? Which is still within the range. And then there's another imbalance to be filled from here all the way to this area here, right? Those are imbalances to be filled. Now, scaling down to the 1 hour, which is where I had the markup, right? That was where the markup was. So let's just take this down a bit, put this down a bit also, and then just drag this in. All right, so yes. So now this is the first imbalance that is visible to us now. When I was marking up the chart, I think the first thing I opened was the 1 hour time frame. Okay, I just saw the breaker structure, and then I had to go to a higher time frame to see if maybe the daily has extended and then it's about to begin retracement, right? And that was what was happening. In terms of the 1 hour structure, we had this high, we had this high low, and then we had this high. And then we had a big breaker structure to the downside. And then I was like, okay, now price has broken structure to the downside. Even in this area, we kind of have some kind of harmonic pattern here, right? Looking at how price extended to the downside here. Let me see quickly, what kind of harmonic pattern is this? So from here down to the swing low, a 71, 71 rejection, 50 level, cipher. They didn't really give us the 786, 886 D completion, right? So this is not like this is not a complete harmonic pattern. I mean, we had X, A, B, C, but then the D is not, right? Yeah, so this is not a complete harmonic pattern. It just happened to give us that X, A, B, C, but it didn't give us the minimum condition for D. Right. So yeah. So I saw the breaker structure in this area, right? We had breaker structure, and then we had what? My trading range, right? Then I had my trading range. Remember, there's the daily range, which I've highlighted, right? So this is the top range, that's the daily top range, and then we have the daily down range way down, right? And then we can see the liquidity that was here. Okay, I said this liquidity now, all of this equal lows, right? This is money just resting below, sorry, above an imbalance, right? So we have the daily imbalance here, and then we have just, money chilling in that area, right? Because this, people are buying, there's, stop losses down here, right? So this is money here, and our price might be attracted to these areas, right? Now it has already broken the structure to the downside, so we have to break the structure in this area, right? And then price. So I had still not seen this chart yet when all of this was going on. I didn't notice it when it had the breaker structure. It was somewhere, yeah, this is where I opened up AUD NZD. And I was like, okay, so what has happened? I set a breaker structure. Okay, now I can see this liquidity that was captured in this area, right? I see this. So this one has been captured already. Okay, they even took out this one, and there was smart money field this imbalance in this area, right? On the 1 hour time frame, that was the last imbalance to the upside in this range, right? So the field it completely, and then price rejected to the downside, right? This is the move up that captured what this liquidity in this area. That was why I marked this as, mitigation, right? So mitigation can do, yes. So any rejection to this area and beyond, and we can begin to anticipate lower pricing to capture this uh, liquidity here and then fill the imbalance. Now, I didn't know it was going to go like 370 pips plus to the downside. I wasn't anticipating that, big move. I know since we have the daily range, it could come to this area and then it could come and fill this imbalance also, right? So these are just extensions, targets, right? After my 1 to 3, then do I still feel it's going to go down? Yes, then you can hold and then wait to see what happens, right? Because I don't control the market. So even though, I have reasons as to why I want to see price go beyond 1 to 3, it is still advisable to take out some profit at 1 to 3, stop loss to break even, right? Because your analysis can not or will not be, there's no way you can know if your analysis is going to be 100%. It is after it has played out, then you see it and okay, you can rate that analysis 100% correct, right? But once you mark up the potential trade idea, it cannot be 100% because you do not, or we do not control, the market. So there's no way I can say beforehand that this analysis is going to be 100% correct. Therefore, I'm going to risk all my account on it. No, it's after that it has played out, and then when I see it, I'm like, okay, now I'm going to give this uh, analysis I did 100% correct, which is what happened in this for this AUD NZD because it played out perfectly, running 370 pips to the downside. So this is like 100% perfect analysis because it played out after. I'm saying it after it has played out, right? But before, there's no way I can give it 100%, right? Yes. So I saw this, liquidity sweep, and then price filled this imbalance, and then price dropped. So just like, here you see, I'm anticipating price to come all the way up to this area, and then a rejection to the downside is what I am anticipating. And then let's see what happened, right? So instead, look at what price did. So before price came, to that area, what happened? It created what? Liquidity in this area also. Can you see we had some equal lows in this area? So this is money, right? So now price wants to what? To sell, but then smart money kind of induced more traders to believe that this is a support level that is going to hold, right? Because price rejected from here and then went up, price rejected from here also and then went up, right? So they are inducing, more retail traders to want to get in, right? And then as you can see, price came down again, came towards that, level of support and then went up again. This is, smart money just building liquidity to go lower and more, right? And then it took price all the way to the upside. Like I said, there is no limit order. There was like I didn't give out a limit order on this, like entry, exit, and take profit. I only pointed out the area I'm anticipating, price to get to and reject from, right? So somewhere like this area, yes, anticipating price to come into this area, and then I did like potential area for redistribution. I wanted price to come into that area and then break structure and lower time frame because I wanted like a lower time frame entry, right? And then the advantages of catching trades on lower time frame is number one, the risk to reward is going to be really, really massive, right? So if like for example now Henry was at 80 level, right? This is the 80. So let's say I played yes, 141.80. Stop loss should just go above this high, about 25 pips stop loss. Now, if I am aiming for this, equal lows, first, even this low, yeah, is like a 1 to 2.26. Now, aiming for this low, yeah, it's that's about 4 reward to risk, right? That's a 4 reward to risk, meaning if I'm risking $100, I'm going to make 400 on this, right? Because I entered based on the 1 hour. But now the reasons why I wanted the lower time frame entry was because, so I can maximize the reward on this trade. Because if I'm going in on a much, much smaller time frame, all I'm looking for is a structure shift to the downside inside this area. So market comes, this is the area. Yeah, I have boxed it out, and then price is coming, price is coming, and then price gets into this area. I'm looking for something like this, and then a big shift to the downside, taking out this previous low and then establishing a new low. This is a structure shift for me. So I'm anticipating a retest to go lower. So it is at this retest I'm catching an entry with a much more smaller stop loss. So instead of having 25 pip stop loss, I can end up having probably 8 or 7 or 10. And then if I have like a 10 pip stop loss in this area also, or 8 pip stop loss, definitely the reward is going to be much more bigger than just this 1 to 4. We could be going like, more than 1 to 4 on this. So we could be risking the same and you could be making like $400 while I'm making much more. We had the same, we're both looking to sell at the same area, but my entry technique was different from yours, right? And then because of that, that gave me an edge to earn more than you, right? Yeah, I mean, if you have like a very big account, then you can just a little push 1 to 4, you could be running in super big profit than somebody that even had much more better entry and lower time frame than you did, right? Which in this case, you can see played out. This trade was awesome, right? So price just came into that area, and then we had what the big rejection in price. Just this one rejection alone gave a 1 to 3. Just this big one candle gave a 1 to 3 already. So if you were risking, 25 pips, you made about 1 to 3 should be 75 pips move in just one candle, right? and then just one candle took out this liquidity. This is like the immediate liquidity, you know, before this one. So this liquidity is closer to our entry than this liquidity down here. And as you can see, smart money came for it. I was awake when I saw this. Like I was asleep when this move happened. Right, I woke up in the morning. As you can see, this happened by 5 a.m. And so I woke up, I think, a few minutes past 5 in the morning. And then I was up, and then I was awake when this candle was printed, this big candle to the downside. And then the candle started by 5 a.m. So that means I was up around, past 5. And then I saw the candle printing. Price already captured what the liquidity, 1 to 3 weeks to reward. So this trade idea already, the minimum condition for this trade to be tagged success is for he to get to 1 to 3 weeks to reward for me, right? And then that was what happened in this case. Price got to 1 to 3. This trade is already a successful one for me, right? And then it could be coming for this low. And then the next candle opened, I was awake already. So when the next candle opened, I saw this big push to the downside. Right, I thought I was going to take up because I was monitoring the chart. I don't trade AUD NZD, but I can study to just learn more. Right, I saw how this next candle opened. Right, I saw this next candle opened, rally down. I actually thought I was going to take out this low, but it didn't. Right, price rally down and then closed bullish, creating what? An imbalance in price. You guys can see from this area here all the way to this area here, that is an imbalance. Yeah, let me show you. All right, can you guys see it now? This is an imbalance, right? We had the first candle, and then we had the second candle that actually created imbalance. So this is our institutional uh candle, right? And then we have the third candle and then the week close, and then the week, yeah, and then price close here. And then we have what? This imbalance in price. So I saw this and I was like, okay, price might want to come into this area and then go down from there. And then the next candle, I was still on the chart. I saw how price came into that area, and then the next candle again, next candle again, the next candle again. And you can see our price just came into that area, feel the imbalance, and then boom, went to the downside. I was seeing all of this when it was going on. And okay, since they came into this area, then I saw the next candle as price closed, big bullish below the opening of the previous candle. I was like, okay, I might be going lower from there. So now let's check in this area. Was there an opportunity to have entered on lower time frame? Let us see. I'm not sure there was because I checked it. I didn't see anything. But let's check it together again, right? All right, so this was the candle. Yeah. Now let's scale down to lower time frames like the 5 minutes. I think we should still have access to the 1 minute since it is the same month. All right, you can see the 5 minutes we had what? 5 minutes was giving us some bullish structure, high, low, high, low, high, low, high, and then we had a big structure shift to the downside. Let's check the 1 minute. How do we have? We have the same thing, right? You can see price was approaching that area, the potential area for distribution, that rectangle I drew, price was approaching it, and then we had what? Higher highs and higher lows, and then price was just going in that bullish formation, right? It was giving us that bullish formation, and then boom to the downside. Like it didn't give us that, you know, shift we want. Like it actually gave us the shift, but it was like a very, very massive shift that didn't present an entry. Like we had this high, low, high. What I wanted was something like this, and then a big shift, and then give us that entry, and then we join to go lower. But that did not happen in this case. You can see it just boom, and then price dumped like seriously to the downside. So it didn't really give that lower time frame entry. If you were up and then you were monitoring price, it didn't give that. For me, I don't know, maybe there could have been a way you entered it, but what I would love to see on lower time frame that gives me a trade idea. I didn't see it on this. So it just like played the whole point of the rectangle and then price just dumped to the downside. So now there was no lower time frame play for me, but if you had the limit on, this would have actually been a very good trade because just one candle, you made your 1 to 3 weeks to reward, right? So we missed out on that one. And let me see. So another place you could have taken it was at this imbalance here. So let's see if there was an opportunity here. I didn't check it. This is going to be the first time I'm checking it with you now. If there was actually a play, you understand? Because do I think it is still going to go lower? Definitely, right? Because we've taken out this liquidity, and then this liquidity wasn't even there when I was marking up the chart, right? It was this one I was focused on. But then this created, you know, smart money created liquidity, and then price rallied up, filled the imbalance. Sorry, took out this, liquidity here, this liquidity here, and this liquidity here. And then we had what mitigation, and then price what dumped to the downside. Then looking at the 1 hour structure, it was giving us some kind of bearish structure. We had this low, we had this high, and then we had this low, right? So we could be looking for sell opportunities. If you measure the fib from this high to this low, definitely you are selling if you're going to be taking the sell at a premium area, right? So let's take the fib and then we measure from this high all the way to this low, right? So definitely this is above 50%. That is a premium area for yourself, right? I mean, so let's assume you wanted to take this, like you just want to take this trade with a limit order again, because I can see the same thing we had here, we had in this area also, right? Did you see the internal liquidity? Yes, I see these two equal highs. Okay, that got swept. Okay, I can see we had these two equal highs that got swept. Which candle? This is the candle that swept the liquidity. So this is that mitigation candle, right? Institutional mitigation candle. Yeah. All right. So this is mitigation candle. And we had what big spike up, captured more liquidity, and then price dropped to the downside, right? As you can see, this is mitigation, and then price dropped. So if you wanted to enter this, another opportunity would have been, entry here, must then stop loss have to be up here for me, which is about 33 pips. That is already above my maximum stop loss in pips. So what do I do when I have a trade idea and then stop loss is way more than 30 pips? I'm just going to wait, right? I wait for lower time frame play, mark out the imbalance, and then let's scale down to the lower time frame and see if there was an opportunity, if he actually gave us an opportunity. So I'm going to go to the 5 minutes, and then we're just going to be monitoring what happened in this area. Okay, I think I see it. I think I see an opportunity already. Let me just scale down to the 1 minute quickly. Was there an opportunity? I see it on 5 minutes, and then it is also evident on the 1 minute, and then let's say the 2 minutes. Okay, is there also the 3 minutes? Yes, we have it on the 3 minutes, the 4 minutes. Okay, it wasn't there in the 4 minutes, but then it was visible on the 5 minutes. So we had to play on the 1 minute, the 2 minutes, the 3 minutes, and then the 5 minutes. Right. Now, starting with the 5 minutes, I could you have traded this. Now, again, you're waiting for what distribution inside your point of interest, right? So this imbalance was a point of interest for me, right? And then I wanted price to come into that area and then give me distribution. I couldn't place a stop loss, like I couldn't press a limit on this trade. Why? Because the stop loss would have been up here to be very safe, and that is about 33 pips, 33 pips stop loss, which is too much. So the other way I do it is wait for lower time frame play. And what do I mean by lower time frame play? This is it here, right? Price come into my point of interest. It gives me this higher high, higher low, higher high, and then boom, a break a structure to the downside. So now that price has broken structure to the downside, quickly, what am I looking for? The liquidity that smart money has captured, my range, and then boom, I'm looking for the mitigation institutional candle. Institutional candle can come in three forms, right? Smart money cube, mitigation candle, or an imbalance. Those are the three things I'm searching for in order to have a trade idea inside that area. So what this has done is that price, smart money, what this is or the benefit of this is that I'm getting in now with a very small stop loss, which I'm going to show you, right? Again, I didn't trade this, I just marked it out and saw it played out and just studied it to see what's up, right? I've major like focus on as in my like my major asset is EU, and then NASDAQ, right? And then Bitcoin, right? Yes, so let's see this, right? What can we see? I see this liquidity that got captured quickly. Okay, so we had liquidity sweep in this area. Okay, so this candle swept the liquidity, broke the structure to the downside, right? You can see how my breaker structure to the downside. Yeah, and then do I have my range? I have my trading range. This is the top range, right? And then I have my down range, which is this is the down range for me, right? Yes, so this is my down range. Okay, so that in this case, based on the 5 minutes, we are looking for the institutional mitigation candle, right? The candle that swept the liquidity before a big, drop to the downside, right? Which was this candle. So if you had like the entry, and then this was already happening around 7:45, 7 a.m. Like I told you, I've been up since like 5. So I was just monitoring this and then just seeing, I didn't trade it. I was just looking at it because I'm kind of disciplined, right? Okay, this is the only asset I'm going to be trading on this account. So even though the opportunities were presenting itself, just okay, I'm just going to look at it, right? Okay, and then see what happens. Okay, now if this was the entry, stop loss should just go above here. Now, this is 1.13781. So we can just reduce this to 80. Okay, so 1.13780. That's an 80 level, right? Stop loss 10, 1. So just reduce this to 10 pip stop loss, right? So this is entry, 10 pip stop loss. This is how I would have played it. I saw it, that this is how I would have played it if I wanted to take the trade, right? So about 10 pip stop loss, and then I can be shooting for what? This, okay, first target of 1 to 3 in this area. Okay, this is 1 to 3, so 30 pips met. You can take profit, take partial, stop loss to break even, right? Whatever you're going to do, as soon as it gets to 1 to 3, just go break even, right? If you want to hold more, fine, because it could reject. Okay, the fact that you mark out this liquidity doesn't mean they have to capture it, or it's a must they have to go for the liquidity. We've seen cases where equal lows are left, right? You see the equal lows anticipating smart money is going to capture it by all means, and then you refuse to take profit, and then boom, they get there, create more liquidity, and then reject, right? So first minimum condition of 1 to 3 met, you can now begin to anticipate maybe price is going to give you like a 1 to 6. You can see, so we've been able to reduce a 33 pips stop loss to what? To 10. We've eliminated 23 pips out of it. And now the advantage is what? We're going to hit our targets much more faster, and then the reward is going to be really big. So this was one entry on lower time frame. Yeah, this one was an entry on a bigger time frame, a limit order. So this one was entered based on what? A limit order. This one was based on what? Lower time frame play. And now we can see how far did the two of them, like how far did they go, right? So I'm just going to cancel this replay, and then we're just going to see what let's see how far. Okay, all right, so this is it. And then price. So this entry up here is the entry on the 1 hour, the limit, and then this was based on the 5 minutes entry. I mean, it went, look at where we are. So I'm going to do something like this, and then, okay, let's just take it to like 15 minutes. Okay, so the 15 minutes is, okay, let's wait. All right, so for this one up, this gave about, so where we are down here, is about a 1 to 14 risk to reward, 1 to 14.69. And then this is you holding this trade for about 17 days, and then it's just going down. I feel this what daily imbalance, price rejected from there, came for the second daily imbalance, and then broke the structure to the downside, took out the liquidity resting at the down range, and then price is still going down. Now, the 1 hour entry had a bigger stop loss of 25 pips. The total reward running is about 14.69. That's about 1 to 14.69, 367 pips. Now, look at this. Just look at this one. This one had a smaller stop loss of 10 pips, and then all the way to the same area This is running 1 to 32.77 risk reward. Now, the advantage of what lower time frame entry, right? Waiting for price to get to your point of interest and then anticipate distribution if you're anticipating to sell, and then if you're looking to sell rather, and then anticipate for break of structure, that is accumulation, if you are looking to buy, right? And then in this case, we didn't have it here, but we had it in this area. And then look at how far price has gone. So this one is running like 1 to 32, and then entry above is running 1 to 14.67. I mean, the entry up was like we entered, like the entry at the top happened before the entry down, but still the entry down was able to, more than, I think, should we say more than double? So let's do this. So 14.69 multiplied by 2, that's about 29. So even the entry after is still like as doubled the entry before. Then you see this 2 of 14.69 will give us 29.38. And then we still have extra what? This is still 32. So we still have like more reward because, because of the power of what lower time frame play. That is how amazing lower time frame entry can be, right? If smart money, if you align yourself with smart money and then you are able to catch an entry based on lower time frame, it can really, really move to your advantage. Yeah, so this is the AUD NZD trade, played out super well. You know, I mean, I wish I was in, but I think it's good to stay disciplined, right? I just saw it, I was like, okay, it's cool. Amazing trade. Right, and then played out perfectly. And this is where we are today. So now, what do I think is going to happen next? I don't know, unless I do a fresh analysis again. But that's played out beautifully well, running 370p plus in profit. Yeah, so this is the trade. Let me know if you have any question. All right, so thank you so much for watching. Have a good day. Bye-bye.